Mortgage rates went down, then they went right back up. Did you miss the boat on refinancing your mortgage, and have you lost your chance to save thousands on your housing costs? Today, we're going to talk about whether it's time to refinance now or if there's another opportunity coming down the road. So if you're sitting on a higher rate from a home that you purchased in the last couple of years, or your debt load is drowning you in monthly payments, then this is for you. All right, so let's start with the recent roller coaster that we've been on with mortgage rates this year. Back in September, we saw the Fed take its first action to cut rates in a very long time, hoping to give the economy a little boost because of rising unemployment and slowing inflation. The expectation of that move caused mortgage rates to drop significantly in the months leading up to that September Fed meeting, almost over 2% drop in rates. And for a while there, with rates hovering just above that 6% mark and the promise of the first rate cut on the horizon, it looked like the perfect opportunity for homeowners to refinance and lock in some serious savings. But then, as it always does, the market didn't do what everyone was expecting. And just when people thought they saw a window to jump in, rates have shot back up over 6.5%.
You're driving me nuts.
Look, the mortgage market can be unpredictable. And while rates most likely will dip again, there's really no guarantee that they'll stay low as we close out this year. Because lately we've seen a lot of economic inconsistency in the data. And with 30 days until this year's election, nothing is for certain in the market right now. So for homeowners who locked into those higher rates over the last 2 or 3 years, it can be very, very frustrating. You see those lower rates, and then before you can act, they just disappear into thin air. The big question is, what happens next? Could rates go up even more, or will there be another opportunity to refinance later this year? That's the dilemma that a lot of people are facing right now. The important thing here is to stay alert. We've seen how quickly rates can change, and if they drop again, you'll want to be ready to take advantage of it. Now, let's talk about who should be considering refinancing. Whether you're looking to lower your monthly payments, get a better rate, or tap into your home's equity, refinancing can be a smart move if the time is right. First off, if you're someone who's sitting on a lot of high interest debt, think credit cards, car loans, or personal loans, tapping into that home equity through a refinance could be a game changer for you. You see, mortgage rates, even when we're in the 6% range, are still lower than interest rates on most credit cards, which can run anywhere between 15 to 25% right now. Imagine paying off all that high interest debt and rolling it into a single lower monthly mortgage payment. Not only does that free up some breathing room in your monthly budget, but you'll also be saving a lot of interest over the long run. Next up, there's a group of homeowners who bought a house in the last 2 or 3 years when rates were higher than they are right now. Many of you are locked into mortgages with rates above 7%, and even though rates have gone up again just recently, they dipped before and they will dip again. So when the opportunity presents itself, refinancing could mean big savings for you. Even with just a slight drop in rates, say between 6.5% to 6%, that could translate into thousands of dollars saved over the life of your loan. Then we have folks out there that are getting very close to some major life events, retirement, sending kids off to college, or even planning for a big family expense. Refinancing now can give you access to that home equity when you need it the most. By tapping into your home's value, you can create a financial cushion for yourself during these uncertain times. And let's be honest, with so much unpredictability in the market, having a little bit of extra flexibility could make a huge difference in your household budget. But here is something important to remember. Timing the bottom of the market isn't everything. A lot of people hold off on refinancing because they were waiting for that perfect rate. But here's the reality. If you wait too long, you might miss the boat entirely. Even if rates aren't at rock bottom, refinancing at a slightly higher rate can still make sense, especially if you're carrying high interest debt or need to lower your monthly payments. It's all about what's best for your situation right now. The key takeaway on here is this: don't focus on hitting the absolute lowest rate. If refinancing can save you money today, help you consolidate debt, or give you the flexibility to handle life changes, it could be the right move, even if rates aren't at their lowest. Now, let's assume you find yourself in a place where you think refinancing might be the good move now or in the very near future. Before you jump in though, there are a few important components that you need to consider. Let's talk about the costs involved, the timing, and the key questions that you should ask your lender to make sure refinancing works in your favor. First, one of the big factors to pay attention to is timing. As we've already discussed, mortgage rates have been on a bit of a roller coaster this year. Rates dropped earlier in 2024, but they've recently shot back up again. So if you're looking to refinance, it's essential to stay informed about interest rate trends. Keep an eye on any decisions by the Federal Reserve or major economic indicators like inflation or job numbers, because these things could push rates up or down in the coming months. And if you really want to try and nerd out, watch the 10-year Treasury bill. If it goes up, rates are going up. And if it goes down, often mortgage rates are going to follow. Timing is everything. Refinancing at the right moment could save you thousands over the life of your loan. Now, let's consider the costs. One of the most important questions to ask your lender is, what are the costs involved? Closing costs on a refinance can range anywhere between 2 to 5% of the loan amount. So it's crucial to understand what exactly it is that you're paying for. These costs typically include appraisal fees, title insurance, origination fees, basically anything that the lender has to pay on your behalf to do the loan. And once you know these costs, the next question to ask is, how long will it take me to break even on these costs? This is key because refinancing only makes sense if you'll stay in the home long enough to recoup those costs through the savings from your lower rate or your credit card monthly savings. So to calculate your break-even point, you divide the total amount of your closing costs by your monthly savings after the refinance. For example, if you save $200 a month and your closing costs are $4,000, it will take you 20 months to break even. And as an industry, we say if it takes you less than 3 years to break even on your costs, then it's a good move. If it takes you 3 to 5 years to break even on your costs, then it might be something that you consider a little bit, depending on if you plan on staying in that house or not. And if it takes more than 5 years for you to break even on your costs, then it's probably something you need to hold off on. And here's something that a lot of homeowners don't fully realize. You may be able to roll some or even all of the costs into your new loan. This is especially helpful if you don't have the cash up front to cover the closing costs, but you'll need to ask your lender if that's an option for you. Often these options come down to how much your home is worth and what your current equity position is. Just keep in mind that rolling costs into the loan means that you'll be paying interest on those fees over time. So make sure it still makes financial sense. Another important question to ask your lender is, can I lock in today's rate? Rates can fluctuate from the time you start your application to the day that your loan closes. So locking in your rate early can protect you if rates go up. And many lenders, like myself, offer what's called a float down option, which means that we can lock your rate, but if the rate falls before you close your refinance, you might have the option to get the lower rate even after you've locked it. But also ask, what happens if rates drop again after I refinance? It's a good idea to get some input from your lender on where rates would have to fall from where you are now in order for a refinance to make sense again, if rates keep dropping. And lastly, timing really does matter. Don't forget to ask your lender about their perspective on upcoming rate trends. Are rates expected to rise, or could we see another dip in the near future? Staying informed about the market can help you better decide on whether to refinance now or wait for a better opportunity. Okay, just to wrap things up, a couple of reminders. We've seen rates go up and down this year, and while they're back up right now, that doesn't mean the opportunity to refinance is gone. Whether you're carrying high interest credit card debt, stuck with a higher mortgage rate from the last few years, or preparing for a major life event like retirement or college, refinancing could be a smart financial move if the time's right. Secondly, timing matters. You'll want to keep an eye on upcoming Fed decisions and market shifts. But just important are the costs. Make sure that you understand the closing costs involved, calculate how long it'll take you to break even, and talk to your lender about rolling costs into the loan if needed. And don't forget to ask about rate locks and what happens if rates drop after you refinance. The key is staying informed and working with a lender who can guide you through the process. Now, if you're not sure where to start, reach out to a mortgage professional to get personalized advice. And if you need a trusted referral, ask your local realtor. They can connect you with a lender who will help you explore your options without all the pressure. Or you could just give this old bald podcaster a call as well. I make these videos to help people understand how crazy the mortgage stuff works. And I know because I do them every day. So if you want some expert insight on if now is the right time to refinance, give me a call. I'd be happy to walk you through it. The bottom line is this: don't wait until it's too late. Refinancing could save you money today, help consolidate debt, or give you flexibility to handle what life throws your way. So take the next step, talk to a lender, review your mortgage, and see if now is the time to refinance.